Yo, what is good, YouTube? Let's go over CRT. So, we're not really going to be going over CRT, but I will be teaching you guys something that you probably have not seen before. So, this is right here is a daily candle, okay? And what you have at the top of it is the body high, okay? You have the high, the swing high, okay? The body low, and we have the swing low, okay? So, when you are looking at the previous day candle, you're going to want to mark out all this for the next day. Alright? What will happen is price will treat the body low as liquidity, the body high as liquidity, the high as liquidity, and the low as liquidity. Okay? What I just showed you is something that I don't think I came up with because I know open eye, low close, but it is something that I don't see a lot of people utilizing. Okay? You can use body highs and lows as liquidity. So we see took out previous day body high. Okay. Took out previous day body low. Took out previous day high. Took out previous day low. Alright. So whenever you are looking at a daily candle and you want to see what the next day will do, this is a good way. This is a good confirmation, okay? So now this works for daily candles, but this also works for any candle. So could be the weekly. Okay? And the same principles apply. So let's take this on the chart and look for some examples. So let's go on the daily time frame. Let's mark out these levels. Okay, I actually caught low day perfectly using this concept. Previous day low, previous day body low, previous day body high, previous day high. You gotta scooch it over to the day of. Let's see how price reacted off these levels. So first of all, we didn't get down there, so let's just focus on these two levels. And we didn't even get it there, so let's focus on one level. As we can tell, the one level that price printed us was perfectly low a day. I did take this trade. It's in my last video. Alright, by the way, I don't really watch this guy. He's not that good. No, he's actually horrible. I don't even know why I said that. So, what you notice is we came down to it and used it as liquidity. Obviously underneath this sell side. And we rejected up, okay? I think we're going to take out this high. Anyways, though, let's look at this on the next day. I mean, the previous day. So, let's see. Previous day body high. And previous day high. Previous day body high. Previous day body low. And previous day low. Scoot it over one so it's to present day. Let's go on the 5-minute. 3-minute will work. Okay, let's see how we respected these levels. So, start off by rejecting from these levels. We come up. We start to show rejection here. And we tap previous day high. We come down. Tap previous day body low. And we go up. Okay? Very similar to this day. And y'all can go back and test this for yourselves. This does work. Okay, let's go on the weekly time frame and see what it looks like from a week. Okay. Heck. Previous week body high. Previous week body low. Previous week high. And we see previous week low. Okay. Hold up, let me go back on weekly. Make this to present week. Okay, let's go on the 50-minute. See how we react to these levels. So, top tick, bottom tick, bottom tick, bottom tick. Perfect. Okay. We're kind of treating these as a mean. Okay. You know, we do see rejections off these levels. We go up, we go down. We go down, we go up. We go up, we go down. We go down, we go up. We go down, we go up. You know what I'm saying? So, I'm giving you guys some valuable information here. Alright? I have been looking more into ICT. I think his concepts are white labeled, and it's obvious that they're white labeled because I can literally show you how they're white labeled. A fair value gap is literally just a low volume node. Alright. You want to know where price rejected? From the low volume node, which is right here, which is underneath this. That's where price rejected. It didn't reject from the fair value gap. I don't even think it mitigated this one. Yeah, it didn't even touch it. Didn't even touch the mitigation. But yeah, so that's where price actually rejects from low volume nodes. It's just white label. But anyways. Yeah, so this is some valuable information about critical range theory. I mean, freaking candle range theory. This applies, you know, all time frames. You can literally just trade off this if you wanted to. I wouldn't recommend it, but I'm not saying you can't. But I would like to give you guys one more thing to look at for the day. Okay? Whenever you see price about to change, okay, about to change trend, okay, change the delivery of price. Whenever you see price delivery about to change, okay, from bullish to bearish, there is a pretty easy way to tell if you are in the right trade setup. So what happens is on the next candle, you do what I call, I forget what I have this labeled as, price rebalance. All right, then you form a breakaway gap. All right, so ICT made the breakaway gap. I made the price rebalance because I think it's just a good concept. So whenever we're looking at price, let me fix this up. I do not need a middle line for this, and I'll make it blue. Breakaway gap. Do not need a middle line. Do not need a border. And I'll make the color yellow. Okay. So, normally at these highs, good shit. Anyways, normally at these highs, alright, whenever we get formed up here, there's going to be some form of SMT, whether it's one candle. There was SMT there, and there was an SMT here. Okay. Look for tiny SMTs on the 1 minute, please. They are useful. They occur at most highs and lows, alright? Little mini SMTs. I call them like micro SMTs because normal SMT you'd be like, alright, it's between here and here. But whenever you're looking at ones that are like microscopic, they do matter, okay? Anyways, whenever you see price dump, you want to see two things happen. You want to see price, first off, rebalance, okay? So before a major dump, what do I mean by rebalance? I'm just meaning, very simple meaning, not form a fair value gap. So right here, you see how these does not form a fair value gap? Okay? This is a price rebalance. Price is rebalancing itself for a price delivery. Okay? Just look right here. Same thing. Now, guys, fair value gaps are more common than you think. Okay? So not having one is a good sign. Another freaking. Hold on, let me just clone this. Another one right here. Okay. Rebalance perfectly. Alright. Now, for this is not a breakaway gap. My bad, guys. This is a Sibby. All right, my bad. Anyways, you want to see price rebounds. Then you want to see two things happen. So we're at a point that I think price is gonna reverse from. Okay. Oh, this is actually hard to do. Boom, boom, boom. Okay, this is like the first case scenario. This is the second case scenario. Okay. So I want to see price equal itself out. Alright. I just want to see it. What the frick did I name it, bro? How did I already forget? A price rebalance. I just want to see price rebalance itself out. Instantly. Like, the next candle. It doesn't have to, but I'm telling you how to make yourself more confident. Now, I want to see displacement. This may seem like super basic, but you'll have to lock in on this. Alright. I want to see displacement and a retracement into it and rejection. Okay. The second option, alright, is displacement that doesn't get retraced into. Alright. So this right here, where's my freaking polyline or my arc? This right here and then this right here represent completely different things that price will do. So this one here is price will go down, most likely, and not far. Okay. Now what you need to be now. Okay, now for this one. Alright. So whenever we see this, we're kind of expecting, you know, short-term liquidity to get taken out. Or like, you know, minor sell-side liquidity. Okay? But whenever we see this get taken out, we expect to see major forms of liquidity get taken out. So, major sell-side liquidity. Alright. I wish I could, like, extend this point. Like, hit extend and then just keep typing with it. It's fine, though. So, but now this sell-side imbalance is not just a sell-side imbalance, buy-side inefficiency. It's a, called a break away gap. Because price is breaking away with so much strength, it doesn't rebalance itself. After this initial rebalance, it doesn't rebalance itself again. Now, what will typically happen is major sell side will get taken out, and then we're gonna come up to the the 50% mark, or maybe like just some internal resting liquidity, and then take out external resting liquidity. Okay, but some of these are ICD concepts. The breakaway gaps are ICD concepts. It's an ICD concept, but this price rebalance is my concept. All right. But typically speaking, just take a screenshot of this, note this, and let's hop into some market examples. So, okay, let's take a look, boys. What do you notice, first of all? Okay, we get a price rebalance. Okay, not an instant fair value gap. Who's texting me? Oh my gosh, why is this dude texting already? Oh my gosh. This guy's annoying. We see a price rebalance. Alright. And then we see a fair value gap get formed, get tapped into. Okay, let me put this in parentheses. What did I say this represented? I said it represented a slow price movement down. And what happens here? What happens here? Tell me if this is fast price action. No, bro, this is slow. This is fast price action. Slow price action. So, okay? And that's what happens, okay? It's because we rebalanced ourselves twice. Now, let's take a look over here. Alright, what do we see? We see a price rebalance. And what do we see get formed instantly? A fair value gap. Alright, now, before y'all hate on me and say that I'm, like, stupid or something like that, we see a BPR get formed. We tap into it, you know, perfectly. And then we dump down. But what you need to be focusing on is not this. Is not this BPR. Okay. First of all, BPRs are stronger, so it makes sense if we tapped into it before we dump. But the main thing that we need to be focused on is right here. Okay. Do you see how we do not come in and fill this? Alright. Look at this. As we are displacing down, we keep price rebalancing and then forming more breakaway gaps. Alright. Do you know how bearish we are right now? The answer is very bearish. Look at what price keeps doing. Breakaway gap. Okay. Eventually, we form a fair value gap that we do retrace into. What is this after, though? It's after a super bullish candle that also tapped into, I think it was, unless I'm wrong. Well, first of all, it's a 11, which is a very key time. Reversals happen, but I'm pretty sure this is also, unless I'm wrong, 50% of this, no, it wasn't. It wasn't. This was after, yeah, tapping, you know, mitigating the order block, which if y'all would have paid any attention to, you would have had your take profit right at this line. Alright, so this is how the trade that y'all had could have gone. Okay. Oh, wait. Oh, I was talking about that one. My bad. Hold on. Let me circle it so I don't get lost again in price action. Oh, yeah. That's not even nothing, bro. That's so funny. Yeah, that's literally nothing. What did I just do? I don't know what I just did. Anyways. So, as y'all can tell, this does work. Alright. The concepts I just shared with you do work. Now, let's look at some more examples. Alright. At the bottom here, alright, what do we notice? We notice a rebalancement within price. Alright. Now, I'm going to share this next concept, which is right here for a different video. Alright, and then what do we form? After freaking a million price rebalances, we form a breakaway gap. Alright. And we don't come into it. Alright. And then we form a BPR. We got internal sell side liquidity, which is really just like the low volume node. And the low volume node was like, it was right there, which is where we bottom ticked and then we shot up to the upside. Okay. So, yeah. So hopefully these concepts are useful, boys. This is a longer video. Definitely a long video, but all the information I shared with you was useful. It all works, and I'm going to make a video on something else after.